Hey, what's up? Can you hear me now?
Hey Josh, how's it going? Can you hear me?
Yeah, I can hear you good.
Perfect, bro. How's it going?
It's going pretty good.
Nice, man. Good to hear. Good to hear.
Just having a little trouble with the support and resistance because I see a lot of lines, and when I'm watching YouTube, I'm like, maybe he's trying to match up red on red. Because sometimes I be trying to match up green on green. I was just trying to figure out how to do that too.
Oh yeah, no, definitely. Yeah, let me pull it up real quick. So, yeah, fix these settings on here. But yeah, are you doing the zones on the shorter time frame, or are you using something like the 4 hour?
I use 4 hours, and then if I can't see it like clearly, I know it's going to show up on the daily. So I go like that if I can't like really pinpoint it on the
Gotcha.
four
Okay.
hours. And another question: Do can I use a K2 strategy off the 2 hour?
Yeah, you can. You can use it on pretty much anything, really. It's just
Okay.
really up to you. Like what you feel like focusing on, because it
Yeah.
works on all time frames. But I always recommend that the higher ones are the ones that should be used because they're more accurate. Because some people want to trade the strategies on like the 3 minute or the 5 minute, and the
Yeah.
thing is,
Yeah.
yeah. And if you're trading on those shorter time frames, it does work, but you're gonna run into a lot of fake outs. If you end
Okay.
up trading on those. But yeah, let me show you real quick. Let me pull up one of these clean charts right here. And then I'll just pull up something random. So I'll just pull up, I mean, we have EU open right here. So I'll just go
Yeah.
ahead and use this. So basically, yeah, there's a couple of settings that you can change on the K2SR that I use. So generally what I have is I have the setting set to 100 bars, and then I have the lines length set to 2000 so that they go
Okay.
across the entire chart.
I
And
got you.
then on top of that, I check off this right here, but it shows show body levels. I'm not sure
Hmm.
if you have that checked off, but I find this to hold it a lot better because then it ends up getting these zones that are well connected.
Yeah, I got you on that one.
Yeah. So basically, when this stuff happens, where these kind of cross over like that, I usually um, I usually disconnect them. So if they get too messy, because the thing is, if you're trading like let me find something for example, like something right here where these green ones and these red ones cross over, you're
Yeah.
not really going to be able to trade in between each of these zones because it's only like about 7 pips or so you're not going to be able to get a trade in between those. So basically the way that I do it is I just cover the entire zone. So I'll go from like this green zone to this red zone, and the colors don't really matter
Okay.
because if it creates a resistance and then it crosses above it, that same resistance turns into a support. So
Yeah.
you don't really gotta worry about the colors, but basically that's pretty much how I draw these right here. Sometimes I'll connect these two right here, and sometimes I'll just create two separate ones. So it's really up to you. For this, it might be better to just create one big one because one way to do it is just to measure between each zone, like I did earlier.
Yeah.
And this one right here is only about a 6 pip difference. So you're not going to be able to trade in between those anyways. So I would just pull this down and cover both of those zones right there.
Okay, I got you on that one.
Yeah. And same situation down here. Like you can see that these two zones they're kind of close. So if you're just kind of a little unsure about it, I would just, use a measuring tool, make sure that it's at least like 20 pips away. It's only about 10
Yeah.
pips. So in that situation, I do the same thing and just stretch it down.
Yeah, and let's say for instance, like on a cell, you got the two zones close together. Would you wait till it breaks below the second one before you even
Exactly.
hop in?
Yeah, exactly. I was going to show you that example right here. So basically down here, if you're trying to take a cell right here and you were trying to cross into this zone right here,
Yeah.
since this zone is only about 25 to 26 pips, give or take, I would wait for it to cross below that right here to take that instead because there's a bigger gap between here. It's like a 50 pip gap versus a 20 pip gap up here. So,
Hmm.
if you factor in the spread, depending on your broker, you're probably not going to be able to make that much profit off, a 20 pip move.
Yeah.
And it would just be too risky. So I personally would just not take it if that's the situation.
Yeah, my broker right now is ST Milk. I'm trying to beat the challenge. I actually got like the 50K one. So
Oh, nice, bro. Nice.
yeah,
Oh, yeah. You had the profits from today, right? Did you take the US 30?
yeah.
Nice.
These past 2 days put me up so much. I was so happy because now I'm on track to finish it. Cause like it takes like 10 days to get the next account. So now I'm
Yeah.
on track to finish it next week and possibly beat the second one next week too. So that's
Oh, yeah.
always good.
Yeah, definitely. So if that's the case, you should probably just count your days down. So I would just open a cheap pair, like maybe AUD, NZD,
Yeah,
and just take like a 0.01, just open it and close it right away so that it'll just count that trading day. I mean, you'll be in
yeah.
profit or you lose like a penny or so, but it's not gonna, it's not gonna
It's not
affect.
gonna hurt you because what you call it. I know you're not trading tomorrow, so I was like, yeah, I'll probably leave it alone because it could be too much news in the morning. So yeah, next week on track to beat it and probably get another one, probably like a 10K one, and try to merge them together.
Nice, nice. Yeah, that's what I always recommend people do because the thing is, the longest process with FTMO is just getting funded. Once you're funded, you're pretty much set. And once you get that first month where you're trading a funded account, you just need to have like a penny over in profit, and then you
Yeah,
can take whatever cut you want. But then on top of that, you get your challenge fee back. So you just keep pretty much stacking, and then you just keep staggering your other account so that you just keep combining them together as
yeah.
time goes.
Question, just like a random question. You don't trade London periods, do you?
Uh, you said London session?
Yeah, I'm just trying to make sure because like normally for the past couple like 2 weeks, New York been going crazy. Like, I've been noticing stronger pairs, like stronger movements during the New York session more than
Mhm.
London. Because London is a lot of fake out sometimes. So I was
Yeah,
trying to figure
exactly.
out.
Yeah, exactly. Like London is usually the session where where the market will set the direction, so it'll bounce around back and forth, and then as you get closer to New York, that's where it sets the direction. So if it's either going down or up, it's usually going to continue on into New York because like London's when the new day starts basically, and that's when people put in their trades, and then people are
Yeah,
just going back and forth, and then once people see the direction that it's moving in, that's when people from the New York session hop onto that trade, and then they just keep pushing it in that same direction that it's continuing on it.
Another question with the signals. I've been noticing that they don't do. It doesn't go green, green. It's like green, then you wait for a sell signal type of stuff. So trading that, should I be looking forward to like the sell if I'm like, let's say I'm trading out the hour four type stuff and like a green buy signal came up. So the next signal should be a sell coming after that. That's what my eyes should be looking towards, or should I continue off of the green buy signal until like a TP hit? How would I
Yeah.
do that one?
So are you talking about the US 30 strategy
Just like off
or in
it,
general?
yeah, like because I kind of noticed it today with US 30 because it was green. You said all right, so I guess we're looking for a sell today. But like off of any other pair, cause I see a lot of the 4 hour, and it might be a buy signal or a sell signal. It don't matter. It's a signal in general, but like it's already passed. Like the move already happened. So should I continue with the trend or should I wait for the next sell signal and then try to plot myself for that? If you get what I'm trying to say.
Yeah, no, I get what you're saying. You're trying to like basically trade like a counter trend trader. You're trying to go against.
Yeah.
Yeah, so it does work that way, but I would always just go with the trend until that ends up happening. So like right here, if you were to, right here we had this buy signal, it pulls up to here, and then you have this buy entry right here, and then you pretty much just ride that to TP at that next area
Okay.
right there, and then you pretty much do the same thing again right here when it breaks this zone, and then you take another buy right there, and yeah, at this point right here, because you can see that you hit full TP right there for like 40 pips, and again for 20 pips down here. You can see that once price reaches this point right here, it starts to kind of taper down a bit.
Mm-hmm.
So in this situation right here, I would still be I would be going with the momentum. So I'd be anticipating this to break above here. But if it starts to reject back like this, then yeah, I would probably be waiting for
The sell
the
signal.
sell signal. Because the thing is, if you're trading on the 4 hour, you're probably going to get some false signals, like something like this right here, where you see these strong bearish candles because you see the momentum swinging down, you see the rejection, and then you
Yeah.
get moving down. It's like four red 4 hour candles. So these are big candles. So on this one right here, you're like, oh, there you can see how that. Did you see how that signal appeared and then it disappeared? So there's like one right here.
I'm getting ready to run pick up something to eat. See
what I
You
run
good.
right here. Yeah, so basically right here, if I run this by one candle, you'll see that a signal will appear and then it'll disappear. So something like that, where it appears and then it disappears. So in that situation, you'd probably be watching it because you got that signal, and then you saw the break below this zone right here.
I got you.
So you could be waiting for it in that situation, but until that happens, until it closes, then you're still going to keep looking for the opposite. Because like right here, you'd probably be waiting for it to close back above.
You gonna watch it real quick? Well, how you gonna watch it with
But you have like favorite pair? I heard you say like GJ, like JPYs are kind of your favorite pairs. Any of those that kind of move? Cause I'm trying to figure out. I'm trying to narrow it down to 8, so I don't always be on looking at the charts. I know like when the move supposed to happen, when it's supposed to occur, type of stuff. No.
Yeah. So I personally like the JPY pairs. But the thing is, if you're trading on the 4-hour, you're probably not going to get entries like every time, because because the thing is, like this week, a lot of JPY pairs, there was a bunch of entries, but it's not always like that every single week. So you kind of have to go back and forth. Like I think the week before that, or 2 weeks before that, we had a bunch of AUD pairs and they were all moving hard. Let me see if I can pull it up over here. So if I go to the results, because you can check just by looking at the
chat.
Just looking at the results, like you could go week by week, and then you can see that like so this was last week on the 7th, on the 4th week of November. You can see that a lot of our pairs that we had calls for were like AUD pairs and JPY pairs. So you could see that during that week, those pairs were pretty much hot.
Yeah, I got you.
And then you go to the week before that, and then you can see like during this week, we had a lot of USD pairs that were coming up. So it just really depends on the week, because on some weeks there's going to be a lot of entries for a certain currency, and then for some week there's not going to be. So if you just focus on the JPYs, you might miss out on a lot of good moves on these other pairs. So I personally would just continue to look at all of them, because it doesn't take that long. If you just, every 4 hours, you just like zoom through one, you see if there's any entry, nothing there, and then you just keep moving down the list, because it doesn't really take that long. But if you do want to focus on something specific, I do recommend, focusing on the JPY pairs, because they move a lot smoother than the other
pairs.
Yeah, the other pairs. Like if you're looking at any of the AUD pairs, they're kind of messy. And same with the NZD pairs. The pairs that I would keep away from would be CHF pairs and NZD, because those are kind of tricky. They do a lot of fake outs.
I got you. But same with all the NZD, because I'm still trying to figure out why is this selling so hard. I'm still I've yet to figure out why it's so hard the past couple of weeks.
Yeah, no, I agree. It's kind of all over the place. So it just really kind of depends on how the market's moving for that specific pair, because you never really know how it's going to be in that week until it actually happens.
With UCAD though, I saw when I zoomed out, it doesn't have a zone at the bottom. So how would you trade off of that if I was looking into buying UCAD next week? Okay, it broke off. I think it broke off like the last lowest zone it had.
Yeah.
You don't have any.
Yeah, the zone's like way down here, bro. I had to go on like the monthly, I think, to find the zone, because it hasn't pushed down this far in so long. So I was thinking about taking this trade right here, or actually there was an entry. The entry would have been right here.
Yeah, I missed that. I pulled out too early. I didn't think it was gonna sell, and then like 5 minutes later, it's deep in the profit. That was so crazy. But
yeah, it's a tricky pair to trade if it's out in a new price area where it hasn't really tested before, because you never know what's going to happen. Because the thing is, if it drops down this far, because you've seen it push down like crazy, so you kind of gotta focus on the other pairs, like the other USD pairs, and see if it's moving like that all across the board. Because in some situations, this this could continue down. Because I was just talking about this with another member about him, because he would think that he couldn't trade it because it was like oversold, like right here.
Yeah,
he was thinking, and I was explaining to him that Forex is different from stocks and like other assets and commodities like US 30, gold and stuff like that, because for those specific assets, they can be oversold and overbought, because it's just one asset, it's not paired with something else. The thing with CAD is that it can never be oversold or overbought because it's just whatever currency is stronger than the other. If like the US dollar is weak for like years on end, it's just going to keep going down, keep going down, keep going down. It's never really going to, just shoot right back up because it's been going down for so long.
So like the RSI type stuff doesn't matter.
Yeah, those don't work on Forex. It's funny because a lot of people like trade with those.
Yeah.
And they take a lot of L's with those, and it's like they don't understand it doesn't work with Forex. It works with US 30, it works with stocks because there's a limited quantity of those, like you don't get so many US 30 until it starts to drop, or you could only buy so many, gold and then it'll drop because there's like it can only go up to so much value. But with Forex, it's just back and forth, literally back and forth.
I never knew that. I'm about to delete off my phone right now. Then, God, sometimes I be looking at it, but sometimes it does be tracking the pullbacks a little bit. But 9 times out of 10, it's going to continue to keep going down.
Yeah, exactly. Because you'll see sometimes the RSI will be going down, and it just keeps going down. You're like, damn, is this ever going to buy back up? But it never does. Yeah, and like a better way to look at that would just be to correlate the pairs. So instead of using the RSI, like say you're trying to sell UCAD, like you're saying right here, if UCAD's coming down, this means that the US dollar is weak, right? So in order to confirm that, you just go over and look at the other USD pairs. So AUD USD, you can see is going up. So if it's going up, the first currency is stronger than the second one. So that's going to mean that the US dollar is weak. And you just go down the list, Euro USD, same situation. It's going up right here because the euro is stronger than the US dollar. And then same with GU, same with NU, and then same with UCAD and USD CHF. The thing with USD CHF, these are opposite pairs because the US dollar is on the left side.
Oh, so yeah.
If it's going down, that means that the US dollar is weak. So if they're all weak, then you could continue to trade in that direction with that specific pair because you have that confirmation for it.
I got you on that one. Yeah, that's pretty much plain blank simple. So you're really just saying supply and demand, wait for a signal type of stuff, and it's that easy type.
Exactly. Yeah, pretty much. You're just well, the reason we do that with US 30 is because when the market reopens, or when we trade it when the market opens at 6:30, there's only one signal that we could really wait for because we're gonna take the first signal that appears. We're not gonna wait for a sell, and then we're not going to wait for a buy to come right after. We're just going to take the first one. So that's why for this, it makes more sense for us to catch the opposite signal because we'll be able to, identify that, all right, this signal is going to be legit because price is rejected off, whatever zone that was up here.
Yeah, I got you on that one.
Yeah. Yeah. So it does work with Forex too. It's just with Forex, since it goes back and forth so much, it's not really necessary because what you're doing is you're trying to catch the momentum, like the direction that it's moving, versus you trying to catch where it's going to stop. Because most of the time it's not going to stop if it keeps pushing in that direction.
I got you. But yeah, that kind of answers all my questions I had then.
Yeah, definitely. Yeah, if you have any other questions, feel free to reach out because we could always hop on for a quick call like this if there's something some clearing up on.
I got you on that one. Yeah, because this is just trading simple. Like I didn't know it could be this simple. Like it's always some other stuff. Like you need an RSI, you need a Stork, you need a MACD, you need like 5 moving averages. And I'm like, bro, it got to be simpler. It really got to be simpler.
Yeah, it's funny because a lot of people want to overcomplicate it, so it makes it seem like you need them, because they were like, oh, I can't learn how to do this unless I have this person. But the thing with this, it's really simple. Like, especially with Forex, a lot of people don't realize that price can only go up and down. People think it's going to go in like all these crazy directions. But if you can identify momentum, using the momentum indicator, you can know exactly where to trade. Because the thing is, a lot of people will just trade, like if they think it's in a downtrend, like something like this right here. If people just think this is a downtrend right here, they're not going to take any buys. But since we got the momentum indicator, we already have a head start, and we know that price is going to be swinging in that direction. So
I got you.
It's really simple. The thing is, you just got to keep it simple because you can either buy or sell. If you lose, then just move on to the next one. With a lot of other people, they try to make it super complicated where they think it could go in so many other directions. But in reality, momentum just, follows through within the entire week.
Got you. And what you call it? The 10-minute time frame, did that come with the Pro?
It might, yeah. So I think you could use any paid membership. I'm not sure if you can use it on the lowest one, but I know it's like,
Nah.
because before it used to be on like whichever paid one that they had.
Yeah, I think I could upgrade one more.
Okay, so you're probably on the basic one, right?
Yeah, I'm on like I think it's like the $14.99 a month one. But yeah, but I only got like they only upgraded the moving averages and gave me an extra chart. They didn't change none of the time zones. That was the main reason why I upgraded to get the 8-hour and like 12-hour time zones.
Oh yeah, because they make a big difference. Like because if you don't have any zones on your specific time zone, you're like, damn, what am I gonna do if I don't know where to look for next? But if you do, you can check on it. Like just click on your chart and then type in a 10, and then the 10-minute will come up on there.
I got you.
So if that doesn't work, then yeah, you'll have to upgrade it. But yeah, I'm not sure because it's been a while since I like looked at the plans. I know they changed a lot of stuff around, within the past couple of years.
Yeah, but I can still use like the day open US 30 strategy on like a 15-minute or a 5-minute. I heard you talking about the 5-minute one time, but
yeah, you can use both of those. They might be less accurate or they might be more accurate, but it just really depends because sometimes you'll get something on the 5 and then it'll be like a fake out, or you do something on the 15, but then it ends up coming too late because a 15-minute candle is like 3 5-minute candles, so you might miss out on the entry if you wait that long.
And question, how did your strategy come up on the 10-minute? Like, what made you say I'm gonna make a strategy strictly off the 10-minute chart?
Oh man,
for USA?
That took a long time, bro. It took like months of back testing. I went back and what I did was I just pulled up the US 30 chart, and then I literally just marked up every day. Like I marked up every New York session. I just went down the list and just put vertical lines at every time. And then what I did was I went through every time frame. So I went back like years. I went back like so much data just to figure out what hits the most. Because the thing is, it hits on all of the time frames, but I found the 10-minute to be most accurate. So I literally just drew lines on every single day, and then I would just test it. I'm like, all right, this is when New York opened. And then I would figure out that, this would hit the best because it was like, okay, this is the best signal for that specific time frame.
I got you.
It was a lot of work. I had to go through every time zone, like every time frame. I went through the 5-minute, the 10-minute, the 15-minute, 30-minute. And then after that, I also had to find a sweet spot because the thing is, the New York session doesn't open at 6:30. It actually opens at 5:30. But the stock market doesn't open until 6:30. So I had to do a bunch of testing just to figure out what had the highest win rate. Because obviously, if you're taking one trade a day, you want to have something that's going to almost guarantee win. So that's pretty much how I figured it out.
Yeah, I got you on that one. But that's a lot of back testing. I can't do that.
Yeah, I mean, it was a lot, but it all paid off because, man, I'm making a lot of profit now. Just trading
in. And what you call it? You think next year you'll probably be on the same thing, like every morning we'll be on live, or it's getting too much work to get on live every some morning? I'm just trying to plot how my January about to go, because that's the first what you call it, FTMO payday.
Yeah, no, definitely. Yeah, no, for sure. I'll probably be going on live every day because I just gotten used to the routine, and it actually helps me too. Because sometimes I'll be slacking off and I'll be doing some other stuff on the side. But if I'm on the live, I got to be on the screen. People are asking me questions, and I got to go and run the strategy live and make sure I'm paying attention. So I'm probably gonna keep doing it. It might even be I might even start doing more stuff. I just I haven't really figured it out yet because I never planned on going live this often. I was planning on only doing live like once or twice a week, but everyone liked it so much. So I was like, I might as well just keep doing it because it's helping me and it's helping everyone else as well.
Yeah, I got you on that. Yeah, I think that answers all my questions right there. Then, yeah.
Definitely, bro. Yeah, sounds good. But yeah, if you have any other questions,
wait, I got one last one.
Go ahead.
You, my fault. Using this one, how do you avoid bad trades? Is it just you? Yeah, like using the strategy you have. Is it just you, or can you pick up a bad trade using this strategy? And that makes sense. I can reword it if it didn't.
Yeah. So, for US 30, or are you talking about like in general?
Like just like in general type of stuff. You can use US 30 as an example, but yeah.
Yeah. So the K2SRs, that's actually kind of fairly new. I just created that indicator probably like early this year. Because what happened was I was applying the strategies, and the thing is I kept getting like the trades would reverse on me. I'm like, why the hell does it keep reversing on me? And then I figured out, I should find these rejection points, because the way that the K2 indicators work is that they cover every aspect of trading to complete a strategy. So basically, the first indicator is the momentum indicator. So you identify, the direction of price, where it's going.
Yeah.
And then the other indicator are the pivots indicator and the trend meter. So those identify the same thing. They identify the direction of trend and the rejection points if you're trading pivots. So on top of that, I was like, all right, so these pivots here, if I just put it on the chart real quick, these pivots, I would see that they would keep bouncing up. And then I was curious, why would the trade, why would it reverse on me? Like, why would it come down here? And then it was supposed to go ahead and continue further down, but then it ends up reversing on me, right? So in order to figure that out, I had to figure out like why was something reversing right here? So that's when I created the K2SR indicator. And then I was like, oh, duh, because there's a structure down here that it rejected off. So I was like, okay,
Yeah.
that closes pretty much all questions right there. And then I figured out that that's exactly what I needed to do to fix the strategy. Because for me, like whenever I find something wrong with the strategy, or if I start to lose, then I'm going to find out a solution to that. Because the thing with trading is that it's like solving a puzzle. There's always something that you can do to make it better, or to prevent any unnecessary losses. And that's the thing with a lot of other traders. They don't realize that strategies can be fixed. Like people will use a strategy, and then if they start losing, they're like, oh, this strategy doesn't work, and they go do something else. And then it's a cycle. They go from strategy to strategy, and then they just keep losing until they run out of money,
Yeah. I was doing that for a lot of times. Like you learn one, all right, you start losing. All right, let's go to the next person that might be able to help you out. And then it went to like 10 people. And then it's a 10 people for me to go to YouTube and say, all right, I can learn this. I can learn whatever they teach me for free right now.
Exactly. Yeah, no, I was the same way, because I never paid for a course. I never had a mentor. I had nothing. So the thing with me is I've like learned all the bad stuff. So I know exactly what not to look for and what to look for in a strategy. And I've gone through like hundreds of strategies. So I was looking for that holy grail for the longest until I figured out, I just got to take the best things from every strategy that I actually do like and that actually works, and then combine that into some kind of super strategy. And that's basically how I created all the K2 strategies for the most part.
And what are the moving averages? Sorry for more questions. But the moving average, what are those? Or it's just like super secret?
Moving averages are just they're just
the
price. So basically, it calculates all the prices for as long as you want to create them for. So if I take everything off the chart right here, and then we have I'll just add the moving average on here, like the simple moving average.
Oh no, I was talking about yours, like your 3 lines. Yeah, like the red and yellow
pivots. Yeah, the pivots.
Oh, that's what they're called.
Yeah, so the 2 pivots, basically, the moving averages, there are 4 different moving averages that are exponential moving averages, and what they do is they just follow price. But they're different from the simple moving average, because if you add a simple moving average on here, it's not going to be it's like depending on how far you put it. So generally, the simple moving averages are used to identify like the overall trend. So they usually use like the 200, the 500, and the 700, something like that. So like if you do the 200, this is how you could identify the trend, how price is moving, but it moves slower. It's a laggy indicator. So the thing is, a lot of people like to trade off the moving average, but the problem with the moving average is by the time you guys identify, some sort of trade, it's already too late. The move's already been gone. So that's why I use the exponential, because it moves with price. You actually get it as price moves with it. So it just pretty much follows it as it goes along.
I got you.
Yeah, but the moving average is just it's just a math equation. It's basically, the average of a certain length. So like right here, we have like a 200 moving average. This just gets 200 of the 4-hour candles, like the most recent ones, and then it averages it out. So that's why it has the line down here, because this is the average of all of those. That's why when it crosses, people think it's gonna, go the other way.
Yeah.
Price is like moving in that direction, but it doesn't always happen. Like right here, price comes down, it rejects off this point, and then it shoots right back up.
I got you.
Yeah. So, I mean, there's a lot of ways to apply the moving averages, but the way that I use it is specifically just to identify the trend because it moves with price as it goes. So, if price is above it, it's going to be trending up. If price is below all of them, it's going to be trending down. It's kind of
I
like
got
having moving averages on different time frames, but all on the same chart. So that's
I
basically
got you.
how they're used for the most part.
Yeah, that makes complete sense. Yeah. Yeah, I got it, man. Yeah. Can't be that hard. Yeah,
Yeah.
I was trying to remember how you drew the zones back up, but yeah, it can't be that hard.
Yeah, exactly. Yeah, the zones are like, I think the zones are probably the main thing that everyone should have. That's probably like the first thing that anyone should focus.
Yeah.
And then that's why in the beginning of the week, I always draw the zones. Like every Sunday before the market opens, I draw all the zones so that I'm ready for the week because I can start applying the strategies and then I can see exactly where to trade and where not to trade. So if like price is too close to a zone, I'm like, all right, should I just hold off on this or should I wait for it to break or something like that,
Yeah, I got you on that one. Yeah, it does slow your mind down to like making better decisions. Because
Yeah,
with a lot of I'll be like, I'm gonna wait for it to break. Okay, yeah, I'll wait for it to break. Cause we're gonna catch like 40 pips. If it does break, you're gonna catch something.
exactly. Yeah. And a lot of people like to trade blindly, but it's like, or trade blindly where they just, take trades and they don't really go identify those structures. But the thing is, these structures actually really like help out a lot because they show you exactly where to trade and where not to trade. Because these structures are like manipulated spots. It's like what I always tell people because the banks and institutions know that everybody's looking for these specific structures. Like literally everybody who's applying any type of strategy, like a break and retest or some type of reversal strategy, everyone's looking for these zones. So the key is not to trade when it gets near them, only when it breaks them or if it bounces off them, because then you get that
Okay.
confirmation.
You ever heard of institutional trading, like order blocks, like order flow stuff like that?
Yeah, I've heard of it before, and I like the thing with institutional trading. It's a little different. Like a lot of people have a lot of different definitions for it, but I know some people that actually institutional trade, like legit, they work for the bank, and those
Yeah.
secrets aren't given out. So this idea that people think they're institutional trading, they're not really institutional trading. Institutional traders don't look at the chart. Like they don't look at candlesticks, they look at price, and they have algos that are trading at specific price points. So it's funny whenever I see people talk about institutional trading because they think they know what institutional trading is, but it's not really institutional trading. They're just trading like basically supply and demand, support and resistance. It's not necessarily, you're not trading like the institutions, like how people make it seem. It's just
Yeah.
when I hear people talk about it because the banks, like, if you're going to work for a bank, they're going to have you sign an NDA. You can't go and release any secrets that you use while you're at the bank. And you don't have that same software that they use at the bank. But a lot of people think that they do. And it's just funny. I don't know. It's just, whenever I hear someone say institutional trading, it just cracks me up because it's usually like some IML people that like brainwash them to think that they're
Yeah.
institutional trading. It's just, it's funny to me.
Yeah, I ain't no losing customers. This time to go to Epic, but Epic is way worse. I hate. You shouldn't have to pay to recruit. You shouldn't have to pay to learn how to trade. And if you
Yeah.
do, if you do, it shouldn't be that much type of stuff.
Exactly.
Just,
Yeah. I mean, they're mostly just for, recruiting and stuff like that. I don't have anything against them, but I just, it's like you're not really trading. You're really just working to recruit people. And the thing is, if you're doing one of those companies, it's like impossible for you to trade, bro, because you don't have time. You're busy bugging people, trying to get people to sign up to
yeah.
whatever you're doing in there, when you could literally just be learning how to trade instead of doing all that.
Yeah, I'm a quiet. I don't like people like that. So I'd rather just trade in my own time and then go on from there.
Yeah, exactly. No, I agree. I think it's a lot better that way. You don't really have to deal with, haggling people and trying to get them to sign up for something that you yourself wouldn't even like, recommend as someone that you really like want to teach, it's just, it's a different business model. It's not about trading. It's more so about recruiting and stuff. And I mean, if someone can smash at that, then, power to them, but I can't do that. I just feel bad if I was to like lure someone into something like that and then they don't make any money. And it's like, they just look at you different because they're like, man, this asshole like scam me.
Yeah, they really do look like that.
Yeah, exactly.
With the UCAD trade you were thinking about taking, would you take it with the news coming up tomorrow?
I probably wouldn't because the thing is, there's such a strong bias that price is coming down. Like I'm probably going to be done trading tonight. I don't even think I saw any any trades. Let me just zoom through these real quick to see if there's anything that was available. But I probably wouldn't trade because the momentum for the US dollar has been pushing that way for so long that what I think is going to happen is probably tomorrow morning. Let me just finish looking through these real quick. I'll stop at UCAD when I get down there. But yeah, for UCAD over here, we're almost there. Yeah, for UCAD over here, it's been pushing down for so long that I feel like tomorrow, when NFP comes out, which is probably going to be bad news for the US dollar because of COVID, obviously. Since it's probably going to be bad, a lot of people are probably going to bet that it's going to come down. So there's probably going to be a bunch of people with sell orders, right? So with all those sell orders, I think what's going to happen is they're probably going to push price like down a little bit. They're probably going to spike price down like real quick, like just spike it down. And then people are going to hop on. People are going to like get FOMO and they're going to be like, oh, I'm going to miss this move. So they hop in. And then as soon as enough people hop in, they're going to spike it way back up and down out. And then they'll probably bring it back down. So it's like something that I personally wouldn't want to mess with because it's just too risky. You know, you're literally gambling at that point. And the thing is, you could get stopped out either way. If your stop loss is too tight, you might get stopped out this way and you get stopped out this way as well. So it's not something that I would do, especially when you start trading a bigger account. It's not really more so about getting these lucky wins or getting like these big wins. Because the thing is, I was going over this with another guy too. You know, obviously a lot of people complain about getting TP1, but the thing about getting TP1 is, so say I'm trading FTMO 100K account, right? So if I'm trading FTMO with a 100K account and we're risking 3% for the full trade, if you take TP1, you're going to get about 1%. So if I'm taking 1% on that, I'm still taking home $1,000 in profit. So, you know, for me, it makes sense for me to move my stop loss and profit rather than to hit that home run to hit the 3,000. Because I'd rather, you know, I'm fine with pocketing 1,000 for that one trade. Obviously, if you're trading a smaller account, like if you're trading like a $1,000 account, you know, and you're only taking TP1, you know, you're only locking in $10. So you can see why people get upset when they don't get that full TP, but they get greedy because they want to get, you know, obviously the full TP. So it's a different mindset when you start trading a bigger account, because 1% on a $1,000 account is only $10. But if you're trading a big account like an FTMO 100K, that 1% is going to be $1,000. So, you know, how could you complain at getting $1,000? You know what I'm saying?
Yeah, you can't complain. That's what people say. Once you get to like once you get your account size to like a higher number, it's really just about how many pips you can catch at that point.
Yeah, exactly. I mean, it's more so about just how many losses can you avoid? Because the thing is, if you just keep getting small wins here and there, it's going to keep stacking up. Like this 1,000, if I have like, you know, 5 trades for the whole week, if I just have 5 trades and they all hit TP1, you know, I would have locked in $5,000 because it's like, it's literally the same thing. And then if you keep increasing that, so say if you say like that first week you made like 100, you have 100,000 and then you make 5,000 that week before. After that you have 1,000, you have 100 and 5,000. So at that point, if you're still taking TP1, you're going to start locking in even more profit, and then just keeps compounding and adding from there. But a lot of people don't realize that, you know, compounding your account really makes a huge impact over time. Like if you look at all of our trades, if you just keep taking all those TP1s and you keep stacking your account and you take no losses, it adds up to a lot of profit. And then your risk just, you know, increasing over time.
Yeah, I got you on that. Yeah, I think that's it right there. That last one answered my question. Okay, last one, my fault. Your stop losses. I saw on AUD you had it for 80 pips. Did you really think it was going to drop to 80 pips like that, or you just being really safe? Like, how would you do your stop loss? Like, would you go below 2 zones under? Would you go under 1 zone, or just how you feel sometimes?
Usually it's at the previous swing. So if I was to enter this trade right here, like this one right here, the swing would be somewhere around here, right? So the swing would be about 90, 93 pips, but we just round that to 100 pips. But it doesn't really make a difference if it's like 100 pips, 80 pips. If you're trading off risk percentage, it's always going to be the same. So this is something that I went over with the last guy I had a session with. basically, I don't know if you trade off risk percentage like I've been talking about, but say if you had a $10,000 account, right? And you're risking 3%, it doesn't matter if your stop loss is 100 pips, you're still risking $300. If your stop loss is 50 pips, you're still risking $300. So the stop loss should never be an issue. And the reason why I put the stop loss back there is because that's where it'll be like the point of no return, basically. Like if price was to come up here and pull it back, then odds are price is going to continue in that direction, So that's the reason why I put the stop loss back there. Because the thing is, I'm sure you've like realized it with like some other trades. If your stop loss is too close, like 40 pips,
you might get stopped out.
You'll get stopped out, and then right after you get stopped out, it shoots right back to full TP.
I got you.
And yeah. So the thing is, I always recommend that people trade off risk percentage because that's the way that you're supposed to trade. I know a lot of people don't learn the right way because a lot of people come from these other companies that don't teach them how to actually trade, and they don't teach risk management and stuff like that. So the stop loss should never be an issue. A lot of new traders or people that don't know what they're doing, they think a big stop loss is a bad thing. It's actually a good thing because it gives you that cushion. So in case price pushes up to here, you won't get stopped out. Because here's the thing, a lot of people don't see, like, you have to think of your trade from both perspectives. You got to think of it as the bank. You got to think of it as an institution. You got to think about it as a market maker. The market makers know that people are putting their stop loss right here. They know that this is the swing for some people because they're missing the fact that the swing is actually up here. So the thing is, people put their stop loss right here because they think it's the swing. So that's why you'll see price get spiked up to here because price will get manipulated. They'll spike price up to that specific point because they know that a bunch of people have their stop losses right here. So they stop all these people out. And then after that, they shoot it right back down to where it was supposed to go.
Yeah, I got you.
Yeah. Because trading is really a psychological game. You got to think of it's like playing chess. You got to like figure out what the next person is going to do, or the person that's controlling the market. What are they doing? They're looking at the same thing you're looking at, and they're over here trying to outsmart you. There. So the thing is, you can't play their game. You got to play what other people aren't doing, because that's why majority of people fail at trading, because they don't really see that aspect of trading. They think everything is supposed to be cookie cutter. Everything's just supposed to go in one direction. But in reality, you got to think of it like you're playing chess with another player. You got to see what the next move is going to be, because you always got to be like 2 steps ahead of the game if you want to win this.
I got you. Well, yeah, that's a true point too. You are playing chess with somebody, and you can't even see what they look like.
Exactly, and the person you're playing chess with isn't another trader. Because the thing is, if someone's dropping like a standard lot, they're not push the market. They could drop 100 lots, 200 lots, 1,000 lots. They're not going to push the market. The thing is, these banks are pushing like thousands of lots. That's why you see these big movements here, because they're putting in big orders, versus, a regular trader. You could have like 1,000 people on your team and they all drop a standard lot. It's not going to be enough to push the market. So you really got to look at it from a different perspective. You got to pretty much look at it like you don't want to do what everyone else is doing. You want to do complete opposite, because that's pretty much how it works.
I got you. But yeah, that you pretty much answered all my questions now.
All right, bro. For sure, man. Yeah, if you have any other questions, feel free to reach out.
I got you. We'll do.
All right, bro. So I'll see you probably next week. So I might go live tomorrow morning. So maybe I'll see you in the morning.
Yeah, just if you do, I'll be on it. If not, I'll see you next week.
For sure, bro. Yeah, sounds good. So yeah, I'll probably see you at one of those times then.
I got you then. Be safe, man.